Hello, everyone. Welcome back to another installment of the Forex Morning Mastery. Good morning to you, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. Well, I'm grateful for life and thankful to be with you this morning as we are going to be taking another fresh new look at the financial markets. Well, the last 24 hours has been quite decisive, really, as you would have noticed that we had a situation where the US dollar actually increased in momentum before we started seeing some stalling in that momentum this morning, as majority in the market are looking forward to the Federal Reserve Chairman's speech, which is coming up much more later in the day for more cues into what the next course of action will be. Well, during the Forex Morning Mastery, we are going to be delving into the chart, looking at the current market conditions from a technical standpoint, using fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of these assets on our watch list for this week. Well, for so far this week, we have been monitoring three major assets on the Forex Morning Mastery, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, we've been doing fairly well across the assets, and the reason why I will say fairly is simply because of the consolidation phase we have been noticing in the market due to the build up ahead of the major event, one of which we witnessed yesterday, and of course what we are looking forward to today too as well. So we are going to be taking a technical dissection to see how we can manage our existing position if we have any, and of course strategically position ourselves ahead of both the London and the New York session today. So once again, I welcome you all on board. For those who are joining us for the first time, you're highly welcome. I'm really glad to have you around with us this morning. And as technical traders, we usually gather here on a daily basis in anticipation of the trading sessions, where we come to check our positions, manage them, and of course use the data we have on the charts to position ourselves ahead of the New York session. So I do encourage you to stay tuned in so you don't miss out on any of the valuable insights we shall be deliberating on today, and of course be part of the subsequent editions. As the more time you spend with us, the better you get to understand how the strategy works, and eventually be able to use that information to make your own independent trading decisions. So once again, you are highly welcome on board. Now, just a reminder, the Forex Morning Mastery, on the Forex Morning Mastery, we usually deliberate on the 1 hour time frame, which is basically our execution time frame. So it's more or less a follow-up detail to my previous analysis, where I was able to do a top-down analysis during the course of the weekend, and I do share this ahead of the new week so we can have a detailed understanding of what we are going to be looking at, be it our key levels for the week and major structures we are going to be using to guide our decisions. So if you had not watched my videos on this asset, I encourage you to watch them, as it will not only give you a background knowledge of what we are doing here and how we got to this point, but it will also serve as an educational tool for you to understand how to use price action to identify potential trading opportunities. And for those who have not watched my videos, the links are right in the description box below, so you can check them out after the live session to have a better perspective into what we are talking about here. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And of course, for those of us who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential opportunity prior, during, and even after this economic event. So on the economic calendar, we usually focus on high impact event coming in from the economic docket that affects the assets on our watch list. Now for this week, we are based on the assets on our watch list. Of course, we are going to be focusing on the United States and the United Kingdom economic docket. So I would like to do some filtering here where I would want to include only the United States and the United Kingdom on the on our radar on the economic calendar. So I'm going to be taking out all these other economic dockets. Then the level of impact of this event too is very, very important. So we are going to be focusing on high impact events alone. Now, if we click on our filter, and here we go. So this is what has been going on since the beginning of the week. Now, for today, Wednesday, October 25, we only have one high impact event to look out for, and that is the Fed's chairman Jerome Powell's speech, which is coming up much more later in the day. That's about 12 to 13 hours from now. And for those who don't know, the chairman's speech is a very, very impactful event, as majority in the market will want to look forward to see what he's going to say, as his speeches holds considerable influence over the financial market. And of course, his remarks provides us with insight into the central bank's outlook on the US economy, and of course potential policy shifts and interest rates changes or decisions that are likely, and the long run this hereby impact our trading decision and of course the market sentiment. Now let's look at I would also want to, because of the fact that we only have one high impact event today, which is coming up much more later today, I want to see if there are other impactful events like the medium impact event to look out for, to give us an insight into what time this event will be coming in. So in that regard, let's us include the medium impact event, and let's see if we can see any event coming in from both the United States and the United Kingdom. And if we do that, let's see what we have here. Okay, so we really do not have much, as we looking at the new home sales change, which is coming up in about 5 to 6 hours from now. And for those who don't know, the number of new home sales is usually released by the US Census Bureau, and it is an important measure of housing market condition. Now, the housing sector in the United States is a very, very significant sector, which of course has an influence in determining the strength of the US economy. And generally, a high reading is considered as positive for the US economy, which dovetails to a bullish sentiment for the US dollar. Now, if we look at the previous data for the month of August, it came in at minus 8.7%. And we do not have a consensus yet. We do not have economics projection yet. So I'm of the opinion that a couple of hours into that event, we are going to be getting a consensus to work with ahead of the event. And as technical traders, what we are going to be doing today is to dive into the chart and look at things from a technical standpoint. And we do know that the anticipation of this event alone has a tendency of influencing the market sentiment, which would reflect on the chart as price action. So now, talking about price action, let's dive right into the chart. And as usual, the first asset we are going to be looking at this morning is going to be the US All Spot. Now, the US All Spot, we have an interesting situation going on the US All Spot as we have a sell position triggered yesterday after price broke down the $85.20 level for the first time in a long time. Now, in the face of easing concerns about supply disruption and recession fears, the oil market encountered this headwind during yesterday's trading session, and as a result of this move significant, we had about over 200 pips move as price action broke down that temporary demand zone. Now we have a barrier which is currently going on right now, but before we go into that detail, and for the sake of those of us who are joining for the first time, and let us all be on the same page here, so let us go through how the week really started for us in this community and what led to the decisions we made at this point in time. So at the beginning of the week, now before I start here, like I said earlier, I'm only going to be deliberating on the 1 hour time frame, and if you do want to have a background knowledge of how we got to this point, check the link below. You will see the link to the Forex Morning Mastery for Monday, where you can see how we started the analysis from the higher time frame. Now let's go back into what I'm talking about here. So let me zoom right into the structure. Now at the beginning of the week, remember that we had our key level situated at the $87.50 level, which was duly identified on the higher time frame. And of course, you know how we use our key levels in this community. As soon as we identify them on the chart, we use them to guide our trading decisions for the new week. Now, if price breaks above the key level, we want to be looking out for market conditions that supports the idea of buying that asset. Now, if price drops below the key level, we do want to be looking out for patterns and structures that supports the idea of selling. Now, with that information in mind, we initially saw price caught within a range at the beginning of the week, where we saw price caught within the $87.50 zone, that key level area, and the $86.60 level to give us an insight into the level of indecision at that point in time. And of course, you know how we use our flag channels in this community. We usually wait for signals in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. But it didn't really start well for us this week, actually, as we saw price break out of the resistance line, as you see here, and price moved about 40 pips in our favor before sellers came in to take us out of that buy position. And at that point, we had a loss at the beginning of the week. But fortunately for us, remember that we also had our sell stop order right below the structure, with the hopes that price breaking down this area may incite a downtrend scenario. And of course, this triggered our first sell position, and we were lucky enough to recoup the loss we incurred at the beginning of the week, as since then we continue to ride this momentum all the way to the downside. Now, during our live session yesterday, we acknowledge an important area in this market, which is situated around that $85.50 level. I think I did an update which I shared on my public platform, that is the exclusive price action analysis session, where we were able to identify this much more later, closer to the New York session. And in fact, in that session, we were able to identify a range just right around that $85.50 level, which has been a support zone since last week Thursday. Now, if we go to last week Thursday, we saw our buy pressure resumed around this area, and as soon as price came back into that area during the later part of the New York session on Monday, we begin to notice some buy pressure resume around that level. And one of the things we said here yesterday is that we do want to see how the market will be reacting to the structure, and depending on what happens, or depending on where the breakout happens, is going to be giving us an insight into where price will be going. And to make things much easier for us, we were able to spot a range between the $86.60 level and the $85.20 area to give us an insight into the indecisive indecisive situation that was going on there. And of course, you know how we do it. Whenever we have this kind of range, we do it for either the breakout or the breakdown of that range to give us a signal of where price is likely going. And of course, price never broke out of the $86 level here. Remember, our stop loss was just right above that area, like I told us of yesterday, and this left our previous sell position still open in this particular market. And look at what happened. We had our second sell position triggered as soon as price broke down the $85.20 level, and since then price action had nosedived all the way to the downside, making us scoop in a significant amount of more profit. For those of us who are part of this profitable journey, well done and kudos to you for being on standby to capitalize on this move. Now, the next thing we are going to be doing at this junction, of course, you know how we do it. We want to be moving our stop losses right now to secure the current sell position. Now, if you would ask me based on this current structure, I will be suggesting that anywhere above the $83.84 zone, let me see this clearly. Okay, $83.82. So let me just mark this level out, as we are going to be needing it to guide $83.82. So you do want to be marking out these levels on your chart right now. So I will be zooming right into the structure. So you want to be moving your stop loss anywhere above that area, and always remember that we do want to be giving enough room for price action to breathe. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Now, if we look at the things from the economical perspective, you'll notice that since the price got into the $83 area, a very strong psychological level since the New York session yesterday, we begin to notice the emergence of buy pressure around this area, which gives us an insight into the inability of sellers to break through this area. And this is a very good signal that we might likely be seeing some potential buying opportunity that could incite a counter trend opportunity. Now, like I was saying earlier, if we look at things from an economical perspective, you will see that the U.S. economy, there is a high demand in oil in the U.S. economy, and the EIA that records the stockpiles of crude in the U.S. Economy, and the last couple of weeks recorded a very poor production in oil in the U.S. economy, which is not a good sign. So they will need to import oil from other economies, and this is increasing the demand in oil in that regard. And if this persists, we might likely be seeing another push to the upside at this point in time. But if we are going to be looking at it from a technical standpoint here, our center of focus for today is simply going to be between the $83.82 area and the $83 level, which happens to be a consolidation phase, of course. And since yesterday, price action has been trapped within this range, which further emphasized the level of indecision at this point. Now, you know how we do it in this community. When price falls into this kind of range, we have no other choice than to exercise patience and wait for either a breakout or breakdown of that range to give us an opportunity to trade. Now, with this situation here, now coupled with this range we have here, remember that we spotted a descending trend line at the beginning of the week, which has been supporting that bearish momentum since last week Friday. So let me highlight it so that you can see what I'm talking about here. So we had a couple of descending trend line. Remember, we had the first one here, which happens to be the temporary one, and the major one is situated just right above it right here. So let me just do some little adjustment on this one so that it can capture most of the pivot highs in this market. So we have the second trend line here, and of course, you know how we do it in this community. Whenever we have this descending trend line, we feel comfortable in our sell position as long as price action remains below that descending trend line. Now let us look at what has been going on here in the last couple of hours. Now, zooming right back into that range, you will see that we have a sort of breakout of that descending trend line at this point in time. Though this candle is still very how old is this candle? It's still about 40 minutes old. We can't yet say this is a breakout, as we still have about 20 minutes, and this could still turn out to be a shooting star candle that will slice through the $83 area to incite more selling opportunity. So we need to be very patient at this juncture to see how the market participant will be reacting to this trend line to decide what our next line of action will be. So now let's talk about the potentials the sellers have at this point in time. Now, considering the range we have here, after that impulsive move that brought us into this range, it is very likely that we have a bearish rectangular pattern where price will break down the $83 area to incite more selling opportunities. Now, there are two ways to which we can capitalize on this one, so I would just like to replay that all over again. But for those of us who are part of this community, you know how we do it right now. So for those of us who are profitable on the US All Spot and you've capitalized on the sell position since Monday, by this time you should be running with a minimum of 300 pips in profit from the two sell positions. And in that regard, you can afford to risk some of the profits you have made so far this week to test waters below the $83 level. So in that regard, you do want to be having a sell stop order just right below the $83 area to capitalize on the downtrend continuation. And in fact, if it doesn't work, we know that we are only risking some of the profits we had made so far this week, so it shouldn't be affecting us at all. However, if you are new with us and this is your first time taking an opportunity on the US All Spot, then I would encourage you to exercise patience and wait for the breakdown of the structure to happen first of all, then scale down to your lower time frame to look out for retest of structure to join the decline to the downside. Now, what we want to see after the breakdown of structure is the fact that buyers are finding it difficult to climb back above the descending trend line or above the $83 level, and this would reflect on the chart as continued selling pressure below the $83 area to join that decline to the downside. So that is how we are going to be selling the US All Spot today. So I do hope that we'll be on standby to capitalize on that move. Now, in as much as we're looking out for selling opportunities here, you know how we do it in this community. We do also want to keep tabs with the opposite direction too as well. We cannot just say because price actually been bearish throughout this week that buyers may not have any chance to push price to the upside. Of course, no. There are still some possibilities that could happen here that could put price to the upside. And in fact, if we take into consideration the economic situation as regards to the increase in demand for oil in the US, we might likely be seeing price rise up again in that regard. Now, let's look at the $83 area here. You can see what has been going on in this market since the New York session yesterday. We saw buy pressure resume here. And in the last couple of hours, we saw our sellers found it difficult to break through that area. Now, with this scenario here, we might likely see a situation that will evolve into a reversal pattern, maybe where price breaks out of the $83.82 level, which happens to be the resistant line of this range, to incite buying opportunity. But personally, considering the fact that this is a very strong bearish momentum, at least since the beginning of this week, I would like to see some confirmations before I jump into any buy positions here. And one thing I would like to state here is that we should all know that this, if we are buying at this juncture, it's more or less a counter trend opportunity. And if you are someone who don't feel comfortable taking counter trend opportunity, then I would suggest that you hold on and wait for higher highs and higher lows before you want to jump into this position. So now let's look at how we are going to be taking advantage of a bullish momentum. That is, what is it that we are going to see on this chart that will make us feel comfortable buying the US All Spot today? Now, the first one here is this trend line here. So if price breaks out of this trend line and retests it, that is, we have a breakout, price comes back to retest it, and we see that sellers were finding it difficult to break down the $83 area, then we can be part of an uptrend situation where we have another buy stop order above the $83.82 level. Now, if that is not the case and instead price continues to the upside without a retest of the trend line, then a breakout of the $83.82 area, wait for the retest of structure, and in fact, the retest could come to either the $83.82 or the $83 area. But most importantly, what we want to see is a reversal pattern. It could be a double bottom structure, head and shoulder pattern, but signs that shows that sellers are finding it difficult to go back below that descending trend line. Now, if this happens, we want to be part of the uptrend continuation. Now, there is a caveat to this whole situation that is going on right now. Now, if we zoom back to look at what happened yesterday, we can see here that price action did break down a significant structure within the $85 area and the $85.50 level. Now, sorry, between the 85 and the, is it 85 and the 85.50 exactly? So we saw price broke down the structure yesterday, and you know, from a technical standpoint, when price breaks down a significant structure like this, we expect at some point in time there could be some profit taking activities go on, which would reflect on the chart as a retracement back into that structure to incite a downtrend continuation. Now, with this information in mind, and if we join this counter trend opportunity, as soon as price action gets into the zone here, we do want to ensure that we move all our stop losses, secure the current buy position, and wait to see how the market is going to be reacting to that area between the $85.50 level and the $85 area. Now, depending on what happens within this area will now determine if we are going to be adding more buy position to our existing trade or get ready to join a decline to the downside. Now, what we are going to be doing here is this: as soon as price gets into that area, so I would like to give a visual representation of what we are talking about here. So if price gets into the zone and we see that the buyers are incapable of breaking through that area, leading into a situation where we see selling pressure or reversal patterns like double top structures, head and shoulder pattern, or we just want to see as signs that buyers are finding it difficult to break through that area, then we want to have our neckline marked out to join the downtrend scenario. That is one way we can capitalize on trading opportunities here. Now, if price goes on to break above the $85.50 area or the $85 area, then you know that we are back within the buyer's territory. Look at how this area had been consistent with buy pressure since last week, Monday. So if price climbs above that zone, then at this point we want to feel comfortable adding more buy position to our existing trade. But trust me, I'm going to be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So these are my views on the USOILSPOT for today. I do hope I made myself very, very clear. But if you if you need some further clarifications or you need me to lay emphasis on a particular area you are yet to understand, feel free to let me know in the comment section. So as usual, I'm going to be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list for today. You can as well use that time to mark out these levels on your chart. So I see your comment, Moika Haupori, good morning to you. Hikers Diary, good morning to you. Glad to have you guys around this morning with us. All right. So in the absence of no questions, I do want to assume that we are all on the same page, and I do hope you've marked out these levels on your chart. Our center of focus basically for today is between the $83.82 level and the $83 area. So let's see how the market will react to this structure. going forward. So with that being said, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, and in fact, though the dollar faced some challenges during the Asian session today, but it appears it had gained some momentum back. As you will see, certain pressure continues to push price further to the downside. Now, let's talk about what really happened yesterday and what led to our decision. In fact, we want to see what happened since the beginning of the week so that we can have a background knowledge of where we were coming from. Now, remember that at the beginning of the week, we were initially buying the GBP USD with the hopes that the pounds will continue to gain some traction going forward, but this was negated by economic features that came in from the United Kingdom with mixed data, as we had not too impressive data from the labor sector. And of course, I think the manufacturing sector was doing very well, but the service sector was not doing too well at all. And this, I think the market reacted negatively to this event, then coupled with some fact that the dollar may likely be gaining some traction too as well. Now let's look at what really happened at the beginning of the week. So at the beginning of the week, we were able to spot a range. At least we saw this range right here between the 1.21660 level and the 1.21450 area to emphasize the level of indecision at the beginning of the week. And for the fact that price action was sitting on this ascending trend line here, we were of the opinion that price will climb to the upside. So we had ourselves positioned just right above the structure where price also lines up with that descending trend line we identified on the higher time frame. So the breakout retest of this trend line lines up with the resistant line of that range, giving us an opportunity to join our first buy position for the week. Then we also had the privilege of adding more buy position to our existing trade, had the breakout of the 1.218. So we were able to scoop in over 200 pips in profit before the sell position came in yesterday. Now, during our live session yesterday, we were hoping that price action will continue to the upside. And as a result of that, we were able to identify two levels. Remember, we had the 1.22700 area, as you will see right here. And then we also added one more level at the highest point at the 1.22890. So I told us all that we should have a buy stop order above the structure yesterday, but unfortunately for buyers, this never happened. Now, we also added a trend line to the structure yesterday. Remember, we had this trend line marked out yesterday where we said as long as price remains above that ascending trend line, we shall feel comfortable in the buy position, looking out for more opportunities. Now, if you remember, we said here that if price at any point in time breaks down both the ascending trend line and the 1.22450 level, then this could be a retracement of that impulsive move to the downside. And I told you that I wouldn't be taking that trade, of course, but I said if you're a counter trend trader or a scalper, you might want to capitalize on that move. So the scalpers or counter trend traders in the house would have profited from this move right now, as we have price move over 100 pips in the last 24 hours. And well done to you for being on standby to capitalize on that one. Well, personally, I was thinking that this is going to be a retracement move, and that is why I did not take advantage of that move. And to help us project where the retracement may likely end yesterday, we projected this area around this zone. Like, okay, let me give you a moment. Okay, so we were able to use this impulsive move, bringing out our Fibonacci retracement to running it through that impulse leg. Then we spotted this area between the 50 and the 78.6 area where we said we might likely see price retrace back into the structure, and then the emergence of buy pressure or a reversal pattern will be all we need to get ready to join an uptrend scenario. And of course, we saw what happened during the Asian session. price came into that structure, we saw a little bit of buy pressure happen around this area throughout the Asian session. And at this point, I was actually thinking that price action will now start moving up to the upside, but unfortunately, that is not what is going on right now. And for those of us who are with me on both my Trading View and Telegram platform, I did share an update this morning that we are caught up within a range right now, and we need to exercise patience and wait to see how the market will react to the zone. So the range we are going to be focusing on today is basically between the 1.21800 level and the 1.21450 area, where depending on where the breakout happens today is going to be giving us an insight into where we are likely going. Now, the fact here is that price action is back into where it started this week. Remember, this is the range where it started this week. So we do want to see how the market will be reacting to the zone to determine what our next line of action will be. Now, there is one more thing I would like to emphasize here. And for those of us who watch my video on the GBPUSD during the course of the weekend, remember that we had a descending trend line marked out on the higher time frame, and to give a visual representation of it, so we had this descending trend line marked out, which has been supporting that bearish momentum in the last couple of months now. Price action is back into that trend line here. So you would agree with me that we are at a very crucial juncture in this market, as depending on how price reacts to the zone may likely give us an insight into where it will be going. So right now, price is just right along that descending trend line, and you know this descending trend line was broken here at the beginning of the week. And from a technical standpoint, when price breaks out of a structure such as this descending trend line, we expect that some point in time price may come back, retest that structure to incite an uptrend continuation. Now, with the way things are going right now, personally, I will just have to remain very patient here and wait for significant setup to guide my decisions going forward. Now, one of the things I'm going to be looking out for is this. Now, we already have price break down the 1.21450 level. This is the lowest point at the beginning of the week. So if price will come back and retest that structure, I want to see something like this retest of structure coupled with a lot of selling pressure before I want to be joining a downtrend scenario. However, for those of us who took advantage of that bearish opportunity at the breakout or breakdown of that ascending trend line yesterday at this point, well, you must be smiling right now, but just ensure you move your stop losses at this point in time. And I will be suggesting that all sell positions stop loss must be moved above the 1.21, around the 1.218 and the 1.21660 area, while we also give enough room for price action to breathe. So let's see how the market will play out around this area. So if we see a breakdown retest of the 1.21450, I want to see a real breakdown. I want to see price come back to retest the structure, give me significant selling pressure before I jump into a sell position. And if it does happen, I will definitely give you an update on my Trading View and Telegram platform. However, if price action breaks back above the 1.218 area, remember this was the level that it was broken out of at the beginning of the week. I'm of the opinion that we might be going back bullish at this point in time. So, but let's see how this could play out, and I will definitely be giving you an update on what our next line of action will be. So on this pair right here, our center of focus still remains between the 1.218 and the 1.21450. So patience is required at this juncture, but those who took the sell position, well done to you. Move your stop loss, secure your current sell position while we continue to monitor price action. So these are my views on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So, in the absence of no questions, I want to assume that we are on the same page. So, in that regard, we shall be moving on to the final assets on our watch list for this week. All right, so the last asset on our watch list for today is my favorite, of course, the XAUUSD, popularly known as the gold spot. And in fact, in the last 3 days now, we really have not made anything significant on this asset, as the market condition here remains very, very choppy since the beginning of the week. Now, currently, the market participants are actually awaiting the first chairman's speech, which is coming up much more later in the day, to give us an insight into where price action will be going. And there is this prospect in the market that the Federal Reserve is likely going to be implementing some further policy tightening measures, which is restraining the bullish sentiment that is currently in this market at this point in time. And because of these expectations, we really need to be very, very careful at this juncture in time. Now, the first thing that happened at the beginning of the week, let's talk about what happened at the beginning of the week. Remember, we had a loss at the beginning of the week after identifying this range within the $1,978.50 level and the 1,965 area, which emphasized the indecision that was going on in the market for about 36 hours here in this market. And in fact, we had the buy position triggered just right above the structure, and price moved about how many pips was that? It moved about 40 pips in our favor before the sell pressure came in, and it took quite a while. We were in a loss position for a while before it finally broke down that structure. During even our live session yesterday, it was when it broke down that structure, taking us out of that buy position in a loss. And one thing I said here yesterday is that if price drops further below the 1,970, breaking down the 1,965, will join a sell position. And I did share an update on both my TradingView and Telegram platform that because of this demand zone here, we do need to move our stop losses and secure that sell position. Price moved over 100 pips in our favor. Moved your stop loss. If you had done that, you will have been taken out at a worst case scenario break even. So till this moment, we are yet to have any open position running at this point in time, and on the XAUUSD we are still on the negative side right now. So let's see how market is going to play out today, if we are going to be having the privilege of recouping the loss we've incurred so far. So now let's look at what the technical structure is saying here. Now, the first thing I would like us to show you here is the ascending trend line, which has projected the bullish momentum since the beginning of this month. Now, if you look at the structure since the beginning of this month we are in, you will see that price action has been on a strong bullish momentum, giving us a beautiful ascending trend line to work with. And you know how we use our trend lines in this community. As long as price remains above the ascending trend line, we of course want to be looking out for patterns and structures that support the idea of buying that asset. Now, in addition to that ascending trend line, we had another beautiful structure identified yesterday, which I immediately updated us on my TradingView and Telegram platform, and that is that zone between the 1,950 and the 1,955 area. Now, in fact, if you go to as far back as last week Wednesday, you will see how this zone here had played a major role in determining the direction of price action. It was initially a selling niche at some point, leading to a choppy situation here before price action did finally broke out and retested that structure on the last trading day, I think on Thursday/Friday of last week trading session, making that area our next temporary demand zone. Now look at what happened here yesterday when price broke down the 1965 area. So you saw how price broke down the structure, came into this area and did a sharp retest of that structure to give us a sign that buyers are still very present within this area. And the inability of sellers to settle into this zone, for me, is a sign that we could still have this area serve as a platform to push price further to the upside. Now, what is it that is inhibiting this bullish momentum? Well, of course, you know what we are looking forward to today, the Fed's chairman's speech, which is coming up much more later today. And everyone in this market are very skeptical at this point, as a major key players you will see based on the current market condition that they have stepped aside waiting for cues into what will likely happen today. And in that regard, we also do want to be holding on and wait to see how the market will react to the current market conditions here. Now, to guide our trading decisions for today, I've been able to identify the key levels we are going to be using to take advantage of any potential trading opportunities. And for those of us who are my Trading View and Telegram platform, you must have gotten an update to that regard. Now, the first thing I did this morning was to identify the descending trend line. As you will see here, that since the beginning of this week, price has been finding lower highs in this market. Now, this lower highs here tells us that sellers are trying to push price to the downside, as majority who had bought the gold at a very cheap price. Remember, this momentum started a couple of weeks ago, very strong momentum, and when a momentum continues like this, it will get to a point where majority will start considering closing in some of their positions to take some profit off their kitty. And if this happens, it usually reflects on the chart as a retracement phase. Now, since the beginning of this week, price action had continued to find lower highs, and in that regard, let us mark out this descending trend line, and we shall be using it as a yardstick to guide trading activity today. And of course, you know how we use our descending trend line. As long as price action remains below the descending trend line, we would want to be looking out for patterns and structures that will support the idea of selling. Now, in as much as we have a lower high here, we are yet to really see a lower low that seems very significant. Now, at this point in time, the lowest point we saw here was here, but we saw that the lower low here had a character of buying pressure all around it. Now, because of this, we really need to just remain very patient. And since we have an ascending trend line which has been supporting this bullish momentum since the beginning of this month, then I would rather want to see price break down that ascending trend line, retest it. Then if price breaks down the ascending trend line, this will be the first time price will be breaking down that structure since the beginning of the month, which is a very significant sign that the trend line may no longer have the capacity to continue to negate the bearish momentum. And if this happens, I want to be getting ready to sell. So to give a visual representation of what I'm talking about here, I want to see price break down the ascending trend line, which interestingly shares a beautiful confluence with that support line of that range we spotted at the beginning of the week at the 1965 area. So we have a very sweet spot here, waiting for the breakdown retest of that structure to incite some selling opportunities. So breakdown, retest, continued selling pressure will make us join a sell momentum. And if we join the bearish momentum, please note this demand zone here, that as soon as price gets into the structure, we move our stop loss to break even, just like we did yesterday, just to secure our position, just in case buy pressure resumes from that area again. However, if this 1950, 1955 area gets broken to the downside, then this will be a very beautiful opportunity to join a massive sell-off to the downside. So this is the only condition for me to join any sell position in this current market structure. Now, with that being said here, we cannot ignore the potentials that the buyers have in this market. This market has been very, very bullish since the beginning of the month, and we have a very beautiful demand zone here, which is yet to be broken to the downside. And in fact, the latest attempt by the sellers to break through revealed that buyers are still very, very strong here, as you saw that beautiful hammer candle, which from a technical standpoint reveals the presence of buyers here. Now, if this situation continues, that is, buyers continue to maintain price above the zone and price breaks out of this descending trend line, then I want to be getting ready to buy. So a breakout retest of structure will be welcome in buy position. In fact, personally, I would just place a buy stop order above the $1,978.50 level to capitalize on an uptrend move. And if in fact price breakout retest, then I want to be joining a move to the upside. So if price continues, then another buy position can be added at the breakout of the 1,985 and of course the 1,990 area. So you can see it's a simple setup, though it might look complicated from afar, but it's a very, very simple setup. Let me show you where our center of focus for today is going to be on. So our center of focus today is going to be between the $1,978.50 level and the 1,965 area, where depending on the direction of the breakout today will be determining where we shall be going for today's trading session. And of course, I will be giving you updates on my TradingView and Telegram platform as to what we are going to be doing if price action gradually moves towards that direction. So these are my views here on the XAUUSD. I do hope I made myself very clear. And if you have any questions whatsoever, feel free to let me know in the comment section. And it's on this note, let us round off and let's wait for some questions. And if you have found this content helpful and useful in making your independent trading decisions for today, kindly support this project by giving the video a thumbs up. Your likes are very valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much for doing so. And for those of us who had liked so far, thank you very much for your likes. And I really do appreciate your support. So let's see if there are any questions before we round off for today's trading session. All right, I see your comment, Picky FX 1800. This is my first time seeing you. I guess you must be new with us. Good morning to you and glad to have you around with us. So you're asking a question here that what is the current interest rate situation and how it's going to affect the gold. I think I mentioned this a couple of times today. So presently it's not really about the interest rate at this point in time, but the market reactions to what the Fed chairman is going to be saying today that will determine the direction of price action today. Remember, the Fed chairman is going to be having a speech like about 12 to 13 hours from now, and that is simply why we are witnessing this choppy situation going on since the beginning of this week, as everyone is stepping aside, waiting for clues into what is going to be saying, and that will be determining what our next line of action will be for today. So whatever he says today will determine the direction of price action. Even the anticipation of what he's going to say will determine. Now, there is this idea behind the anticipation of this event, as the cliques around those who are going to be releasing this event already know what is going to be released or said during the event. And because of this, you will begin to see the traces of their moves in the market via the movement of price action, which will of course reveal some patterns and structures that we can use to anticipate what the event is going to say. So basically, it's not really about the event itself or the rate itself, but the anticipation and the reaction to this event. So that is really what we are looking at on the chart. Presently, the rate is favoring the US dollar, but there's been some insinuations in the last couple of weeks that there are likely going to be a rate cut by the first quarter of next year. And if there's going to be a rate cut, definitely majority of people who are holding on to the US dollar will want to be selling at this point in time because of the yield that they would have to gain right now before the cut happens. And if they are starting to insinuate cut by the first quarter of next year, it might even happen earlier before that. So these are things that we are all taking into consideration. But one thing I believe in is that the nature of price action will reveal to you the psychology behind the major key players in the market. And of course, we can use that to position ourselves strategically ahead of the event or the speech, whichever happens. So I do hope I answered your question, PKFX 1800. If you still need further clarification, please feel free to let me know in the comment section. So in the absence of no questions, I want to assume that we are all on the same page here, and it has been a wonderful moment with you guys. I really appreciate every single moment I had with you guys today. So today we were able to attend to 4 major assets, which has been part of our watch list since the beginning of the week, which includes the USOILSPOT, GBPUSD, and of course the XAUUSD, and all of which we were able to identify simple setups that we are going to be using to guide our trading decisions for today. So I do hope you marked out this level, and I encourage you to exercise patience and allow the structures to mature before you jump into your positions. And please ensure you have a well-defined risk management strategy, as every levels we have on this chart as guides us to place our stop loss. So if you listen to me carefully, all I say here makes you to be able to decide where you will be putting your stop loss, like your trend lines. When I say your ascending trend line guides your bullish momentum, of course, if you are buying, you definitely want to have your stop loss right below the ascending trend line. And please always remember that you do want to be given enough room for price action to breathe so that you don't get caught up with the stop ons that usually happens around such areas. Now, for those of us who are joining for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And I'm very glad you have you around with us, and I look forward to seeing more of you. So I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand how to use the strategy and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you all on board. So it's on this note, I wish us all the best of luck, and that reminds me, I have dropped the link to the XAUUSD live window right in the comment section, and you can click on it, click on the notify me button so you can get notified as soon as we come on live. Now, for those who don't know, the XAUUSD live window is a platform born out of a popular demand in this community, where we all come together to monitor the gold assets real time here on this platform. So it usually kickstarts 5 to 10 minutes into the New York session, and it takes place for the first 6 hours, 5 to 6 hours of the New York session. So I look forward to seeing you guys right during the XAUUSD live window. Ika's Diary, I see your comment. Thank you very much, and I wish you a wonderful day too. So it's on this note, I wish us all the best of luck, and do have a wonderful evening, everyone. And I look forward to seeing you all in the comment section of both my Trading View, Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.